Good morning and welcome to Stock Market Today. It is Wednesday, September 4th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. You can follow along with this show as well as get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were down in Tuesday's trading, but did move off the worst levels of the day. The ISM manufacturing number came in below 50 for the first time since August 2016. The defensive bond proxies outperformed as rates moved lower while industrials and technology underperformed. Treasuries were mostly stronger with the curve steepening. 210 spread closed slightly positive. Dollar was down on the yen cross, but little changed against the euro. Gold finished up 1.7%. WTI crude down 2%, but did close off the worst levels of the day. So your outperformers, REITs and utilities, add staples and discretionary to the mix there. Underperformers, industrials, tech, throw in financial services and materials as well. S&P futures here this morning, though, are up 80 basis points after U.S. equities came under pressure to start the week yesterday. Asian markets were mostly higher overnight. Hong Kong rallied nearly 4%, while China gained nearly 1%. European markets are higher. Treasuries are mostly weaker with the curve steepening. 210 spread no longer inverted. Dollar is stronger versus the yen, but lagging the euro. Gold down 70 basis points, and WTI crude is getting a little bit back here, adding 1% to start the day. And what do we have for the S&P 500? More of the same as we fade from the top of the range yesterday, but now futures are looking higher this morning. Support is in that 2,800 to 2,850 zone that we've been highlighting for some time. Does incorporate a rising 200-day moving average. Resistance is in the area between 2,950 and 3,000. RSI is still showing signs of life, but remains in bearish ranges. And actually ticked back below 50 with the decline in stocks yesterday. But Chaikin money flow is bullish, so the indicators are still kind of mixed. Market is still choppy, above a rising long-term trend line. What would be nice to see if we can move this support zone up, right? If we could start to move this support zone up to, say, 2,850 to 2,900 as the market continues to hold that 2,900 area, that would be part of a building process that likely leads to an upside resolution. Not quite ready to say we're there yet, but we do have a few higher lows working in our favor. So we'll continue to watch the market. We're still choppy. Continue to focus on the leading sectors and industry groups for very bullish and bullish stocks when those stocks become oversold. Taking a look at our market in a minute now. Markets in the U.S. remain in their trading ranges. Sentiment is skewed to the bearish side where it has been for the past couple of weeks. Utilities break to new highs as yields continue to fall. We'll take a look at that chart a little bit later in the show. ISM manufacturing below 50 for the first time, so you can add that to the list of data points that will get investors worried, to the list of data points that continue to focus on growth slowing. Futures do point to a higher open, as we said here today. Now, taking a look at the power bars for the major indices, the Dow lost a little over 1% yesterday, 2 bullish stocks, 7 bearish stocks. S&P 500 down 60 bips, 58 basis points, 72 bulls to 99 bears. NASDAQ was an underperformer on the day, 17 bulls, 26 bears. Small caps, a big underperformer on the day, down nearly 1.5%. And that was enough to skew the power bar ratio for small caps back to the bearish side of the coin. Take a look there. 335 bulls, 396 bears. Bonds uptick, sending yields lower, which helped the utilities, which added 1.77% yesterday. And if we look at the utility sector, which I'm focused on in my note today, you can see that there are 7 bullish or very bullish stocks and 0, count them, 0 bearish or very bearish stocks in that group, which ticked at a new high yesterday. According to the Chaikin Power Bar, small cap stocks and small cap stocks and large cap stocks are somewhat bearish. Major markets across the board are mixed. Taking a look now at our stock of the day, and before we go any further, I will tell you in full disclosure that I am a holder of Twitter. ticker symbol TWTR, closed at 41.96, down 1.62% yesterday. So an underperformer on the day. Twitter has a very bullish Chaikin power gauge rating due to very strong earnings performance, very strong price volume activity, and very positive expert activity. And when we take the 20 factors, 5 in each of these 4 categories, we come out with our very bullish rating. What do we have? A very bullish stock, strong trend, strong industry group. Market and model are in agreement as the stock's been an outperformer since early July, and it has seen the intensity of that outperformance pick up of late. So a very bullish stock that's outperforming the market. Money flow bullish, above a rising long-term trend line, above a recent breakout level with support at $40. My only real issue here with the stock in the near term, for anybody who's not currently involved, is that it is overbought based on our overbought, oversold indicator. We like to look for opportunities in very bullish stocks when they become oversold within the context of an uptrend. Right now, we have a stock that's overbought within the context of an uptrend. So if you're there, I think you stay there. I know I am. If you're not involved just yet, I think you want to look for an oversold position, especially if the stock holds above that 40 level, which is quickly lining up with a rising long-term trend line, and it then sets up a more compelling entry point for Twitter. TWTR, if you're not there, add it to a bullish watch list. If you are there, stick with it. According to the sector tracker now, movement in the major sectors over the last 5 days, real estate moves to the top of the list. Utilities are in the top 3. Energy has had a bit of a counter trend rally, and I do think it is counter trend in nature. Still very difficult for me to get excited about the energy sector at this time. Industrials and materials starting to show signs of life. Discretionary fins and staples, middle of the road. Healthcare, comms, and tech have been underperformers over the last 5 days. But over the last 5 days, similar to yesterday, all of the major sectors are higher, but still a bit of a defensive / yield play feel at the top here, with utilities and real estate holding 2 of the top 3 spots on the list. Now, speaking of energy and its weakness, let's look at oil, gas, equipment, services. Over the past 6 months, this group has been an underperformer, underperforming the S&P 500 by 41.24%. And the power bar ratio shows no signs of life. Very weak, with 22 bearish or very bearish stocks for only 1 bullish or very bullish stock, and it's currently ranked at the bottom of the list, 21 of the 21 subsectors that we look at. Now, some of the indicative names there with very bearish ratings: Schlumberger, SLB, Helix Energy, HLX, and Drillquip, DRQ. Are obviously names you want to avoid or potentially look to open bearish positions when those stocks are overbought, especially if that overbought reading is met with bearish money flow. But this is just an area of the market that we continue to want to avoid, whether we're looking at equipment names, whether we're looking at the E&P names, whether we're looking at energy as a whole. The group just continues to be in a downtrend. Take a look at this chart. XES, the Spider S&P Oil and Gas Services ETF, very bearish. Chaikin Power Gauge ETF rating, weak trend below a declining long-term trend line. Steady downtrend for pretty much the past 12 months. Throughout that time, the group has underperformed the S&P 500. It is now sitting on that very bearish ETF rating. Money flow, more bearish than bullish throughout most of the past 12 months, currently on a bearish rating. So again, you can see here, it's just hard to get excited about this group. And what I will say is that in the near term, it is overbought within the context of its downtrend. So potentially some bearish opportunities within the holdings of this group if there are similar characteristics. Overbought, very bearish or bearish rating, especially if it has bearish money flow. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. There was a vote in the Senate that sent DaVita higher by 3.85%. New contract sends American Tower up by 3.32%. The hurricane sparing Southern Florida helped out RE, as many of their reinsurance exposure is in Southern Florida. That stock higher by 3%. No real news on NEE, and more MLM moving higher on some data around Texas cement shipments. On the loser side of the coin, Alexion continues to break lower. Remember, one of their patents is being called into question. That sent the stock lower by 10% last Friday, following through 5.5% today. Didn't see any real news to take IPG Photonics down by 5.25. Concho selling some assets, also trading lower with oil. That stock down by 5% on the day. Abiomed's been pretty volatile, mostly with a downside skew. Nothing company specific in the news that I could see yesterday. That stock was lower by 4.8%. And Cody seeing some profit taking after a solid week last week. Stock does have a very bearish rating, so it might make sense to take a look at that one for potential bearish opportunities after popping last week. So let's take a look at what we're talking about in our note today to Chaikin Analytics clients. Sentiment is still bearish. Taking a look at the CBOE equity put call ratio, you can see we're still skewed towards the higher end of the spectrum as the market continues to chop. Now, readings above 0.75 tend to coincide with local lows in the market. We are retreating after being above that level, but still skewed to the bearish side of the coin. And if we look at some of the other sentiment metrics that we like to look at in our note, the VIX is still up elevated above a 2-year regression line. The CNN Fear Greed Index is on a reading of 25. Now, that did improve from 16 last week, but it's still in a position of extreme fear. So from a sentiment standpoint, investors seem to be bearish, and based on put call ratios and the VIX, tend to be positioned bearishly. That could provide some contrarian firepower if the market does eventually break through the top side of this trading range, which we've been highlighting for quite some time. Rates remain under pressure. I didn't mark up this chart. I just wanted to present it for what it is. 10-year yield continuing to collapse below a declining 50-day moving average, below a declining 200-day moving average, both of those falling persistently. Now, we do start to run into some support around the 1.35 area, but the path of least resistance continues to be lower for yields. Look at the RSI, how it is entrenched in bearish ranges, lending a momentum confirmation to the trend lower in yields. Now, a lot of people wonder how much lower can we go. It just bear in mind, there was a large amount of global debt currently trading at a negative interest rate. Do I think we're going to go lower in a straight line? Absolutely not. There'll be some backing up and filling in the yields, but I think ultimately for now, the evidence supports lower rates. And as rates move lower, we would likely continue to see the bond proxies in the equity market outperform your real estate, utilities, both of which going out at highs yesterday. So just something to keep in mind. That's why we pay attention to rates. Obviously, we want to know what they're doing because there is an impact for the equity market. So just continue to monitor what's happening with yields here in the US and globally. And as we said, new highs for utilities. Take a look at the XLU. The Utilities Select Sector SPDR Fund traded at a new high yesterday. Look at this big move higher as rates move lower, as that ISM number came in below 50. You have some solid support just above the $61 mark, rising to 50-day moving average, rising 200-day moving average, and all the while this uptrend is confirmed by momentum, which has not broken below from bullish ranges, right? Currently overbought, right? So wouldn't be surprised to see a bit of a backup, but momentum confirming the price action that we are seeing in the utility space, right? And the same thing could be said if we were looking at real estate, again, largely a function of what's happening with yields here in the US. And if we look at the Utes on a relative basis, we can see here that they've broken this downtrend line and are now continuing to move higher relative to the S&P 500. And as we showed you earlier, that power bar ratio skewed bullishly increases the odds that outperformance is going to continue. So if you're looking for names in the group, you can look at a name like Edison International, EIX, the ticker symbol here, closed at 73.40, up 1.5% yesterday, has a bullish Chaikin power gauge rating, strong trend, strong industry. Market and model are in agreement as the stock has been outperforming since mid to late June. Currently oversold and rounding out of that oversold condition, persistently bullish money flow since June, and the stock did trigger a relative strength buy signal at Chaikin Analytics today as it trades above a rising long-term trend line. Solid support here at the $70 mark makes this a compelling name to consider on the long side of a portfolio if you're looking for some exposure to a leading industry group. That's going to wrap it up for today. My survival guide will be out later. I'll be here tomorrow.